Thinking of buying or selling a home? In this video, I will share with you 3 of the 9 steps in finding out the right mortgage for you. Coming right up. Hi, my name is Lei Villar-Cisneros, your real estate go-to resource in the Greater Toronto area, where I help families like yours achieve your home ownership goal. Now we are on the second series of the 3-part video series about choosing the right mortgage. Let's get to it. Number 4, fixed or variable mortgage. When you are on a budget and this is your first time to have a mortgage, it is advisable that you choose a fixed mortgage so that your payment will be the same from day 1 up to the end of your term. This way, whatever happens to the market, whether the rate goes up or down, you are assured that you would be able to do your budget. Now, variable is for those people that have more equity in their house and they are not afraid to gamble with regards to the interest rate fluctuation. Variable mortgage rides with the prime. So every week, the Bank of Canada decides what that number is. And if it changes, then you have to adjust your monthly payment. To learn more about fixed and variable mortgages, check out my other video entitled Fixed or Variable Mortgages. Now we'll go to number 5, and that is the frequency of payment. Did you know that by just changing your frequency payment, you can save up to 7 years on the amortization of your mortgage? And that is a lot of money. And how do you do it? There are 6 types of payment frequency that you could choose from, and they are monthly payment, bi-weekly, weekly, semi-monthly, and there is another modification that they call accelerated bi-weekly and accelerated weekly. The accelerated weekly and the accelerated bi-weekly have pretty much the same interest savings. Because you always pay for the interest first, if you chose a monthly mortgage payment, that means you have to pay a 1-month interest first before you pay for your principal. Now, if you split that into 2, that means that you will only pay for 2 weeks interest. Similarly, if you split that into weekly payments, you will only pay 1 week of interest before principal is paid for that same amount. If you choose an accelerated bi-weekly, this only means that you will be paying every 2 weeks. Because we have 26 weeks in a year, the last 2 bi-weekly payment that you will pay will go towards your principal. So that last 2 weeks will not get any interest payment. So if you keep on doing that, you will strip off 7 years out of your mortgage amortization. By simply dividing a monthly payment into 2, let's say if you have a mortgage payment of $2,000, split that into 2, that's $1,000. So you pay $1,000 every 2 weeks. You're already shaving off interest and putting more money towards your principal. So that's a tip that you have to remember when you have your mortgage. Number 6, do you go standard or collateral mortgage? A standard mortgage is basically, let's say for example, you have a $400,000 mortgage on a $500,000 house. So the bank will register $400,000 loan on a standard mortgage. But on a collateral mortgage, they will register up to 125% of your home value. So that means that even if you did not exercise getting an extra line of credit or credit cards with your mortgage, whenever you renew it, you have to deregister that payment. So that means that whenever you switch mortgage to another lender, that a lawyer or a legal team needs to deregister that mortgage. So you will pay for a lawyer's fee, and that's gonna be like about $1,000. But the advantage of having a collateral mortgage, however, is if you are getting a line of credit cards, then they don't have to check with you because they already have a collateral, which is your house. There is an advantage to a collateral over the standard and vice versa. To learn more about buying, selling, or financing a home, check out my other videos, and if you have not subscribed yet, do it right now, and don't forget to hit that bell so that you will be notified when a new video is uploaded. Check out my next video for the third and final installment in the 3-part series of 9 steps in choosing the right mortgage. Thank you so much for watching, and I'll see you on the next one. Bye for now. Don't forget to share.